Welcome to Go with Kyle Harbaugh.
Hello, and welcome to Go There with Kyle Harbaugh. Normally, I am the one being asked the questions, but today is a little bit different. I have a friend and a great expert with me, Frank Rekis, and we're going to be talking about financial matters. We're going to talk about how to earn more and work less, and I wanted to bring Frank on. Frank, tell us a little bit about yourself.
Well, thanks for having me, Kyle. First of all, I'm glad to be here and really excited about doing this podcast with you. A little bit about me. Well, born and raised in Chicago. That's why you've got that background behind me. I don't live there anymore. I now live in South Florida in Boca Raton, but Chicago is still a big part of me and my life. I've been a financial planner for 34 years this month. And I didn't start out there. I came from a retail background. And when I got tired of that, a letter at home found me, and I started working in financial services. And about 4 years ago, I discovered that law firm owners was my niche, and that's what I've been focusing on. And I love working with them and really enjoy the work that I do.
Oh, that's great. I love it. And that's why I wanted to have you on, because I know that you work specifically with lawyers, with law firm owners. And I wanted to ask you, first off, a lot of law firms, they earn a lot of money, but it's not always the case that they're taking it home with them. And so I wanted to ask you how law firm owners often struggle with retaining that income.
Yeah, that's a really good question. And a lot of the firm owners that I work with, and some of them are solo, some of them are, small to mid-size. The thing is, and I think the biggest thing is the cash flow and the budgeting. You could have a lot of money coming in, but if there's also a lot of money going out. And I realize that when you're initially starting your firm, whether you're renting or buying a building, you're hiring people, your staff, your support, your advertising, how much are you spending on ads? How much are you spending on social media? Your website, all these different things come into play, and you could be doing very well as far as income that's coming in. But if you haven't taken a few minutes to take a look at personally how much of that you're keeping, that's where the problem is. And because they're so busy trying to get the firm up and running, or the firm is up and running, they don't dedicate the time to do the planning. And that's the biggest challenge that I see for them. Because they're so busy, it's like they don't want to set aside 30 minutes to an hour once or twice a month to actually sit down and talk about the planning that they really should be doing.
Yeah, that makes a lot of sense. And having a good plan and then being able to stick to it is so important. I wanted to talk with you. Can you tell us a bit about your practice? I know some outfits, they're very focused on, say, insurance, and some are very focused on investments. But what's your approach?
So, great question. As of last September 2024, I'm an independent financial advisor. So what does that mean? It means I don't work for a specific company, right? I'm not going to name any of them, but I don't work for a specific company. So I don't have any proprietary products that I have to sell. And that was one of the reasons why my business partner, I made that move to go to independence, is so that we wouldn't have those restrictions on us. So what do? Well, our focus really is on tax strategies and tax planning, because nobody likes to pay those taxes, right? I know I don't. I'm sure, Kyle, you don't. I'm sure anybody listening to us doesn't want to pay them either. So it's looking at different ways to save on taxes. Everything, of course, is above board. We collaborate with the current CPA, or, I was just on a call before this podcast where a couple of the partners said, we need a CPA. We don't have confidence in the one that we're working with. So it's the tax strategies. We do comprehensive financial planning, which is a fancy word for doing financial planning, but we want to create the roadmap for you, the law firm owner, that's going to cover a multiple of different things: retirement planning, it's going to be wealth management. So we're going to look at Do you have a 401k? Is a 401k necessary? Is a profit sharing plan something that we need to add? Is it above and beyond that with a cash balance plan where you could put away up to 6 figures and save some significant dollars in taxes? Then we look at risk management. Do you have the right insurance in place? Is there enough insurance in place? And we look at your life insurance, your disability insurance, and even long-term care insurance, which is becoming a big thing for a lot of people, because at some point, most people are going to need some form of long-term care, and we want to make sure that your assets are protected. And then it's the wealth management, individual investing or investing on the corporate side. So it really is looking at a financial situation from the foundation all the way up. And I like to say that we create the roadmap for you that's going to give you the financial freedom that you want. And everybody's different. I don't ask anymore, what age are you going to retire? What does it look like for you 5 years, 10 years, 20 years down the road? What's going to happen? And it's asking some very specific questions, which then allows us to help build the plan, that's right for you.
Okay, so what I'm hearing is you take a very holistic approach. It's not like you have to sell this insurance, so you're going to push this insurance, or you have to sell this investment vehicle, so you're going to promote that. It's whatever is, based on the goals of the person you're working with.
Exactly. It could even be a situation where someone has an insurance person, they have a investment person, and they just want to know if what they have is right, how it works for them, and is it going to get them where they want to go. So we can do a standalone financial plan and not touch anything else that you've already done. But what the financial plan will do is make sure that everything is integrated and coordinated. And if it's not, we'll make a recommendation. At that point, with the recommendation, I tell people you have 3 choices. You can go back to your advisor. You can do it yourself, which is probably not going to happen because you're too busy to do it yourself. Or if you like us enough, you can work with us. Either way, whichever you choose. But I would say that probably 90% of the time, we can find something that needs tweaking or something that might be missing as part of your plan. At that point, it's up to the individual if they want to move forward and implement or not.
That makes a lot of sense. I like that. I like that approach. So I wanted to ask you, some of the lawyers I work with, they went into law because they're not numbers people, and maybe these are some new ideas for them. Can you explain the difference between income and net worth?
Income is obviously how much you made, but at the end of the day, what are you actually worth? Between your real estate, between the business itself, between your checking, your savings, your brokerage account, your retirement plan, your life insurance, any other real estate that you might have, properties that you have, cars, boats, all of that comes into play as what will, as you call it, your net worth. When we do our planning, we're also creating for you what's called a balance sheet. We're going to show you what your assets are. We're going to show you what your liabilities are. Sometimes they don't like to see that because it might be a little upside down. But I think by seeing that, it gives them the opportunity to see where they stand. And I'm not here to judge anybody. The fact that someone is actually talking to me about their situation shows me enough that they care and that they want to do something about it and that they care enough to do something about it. I would rather get to somebody way too early, right? Before we get to someone that's, it's too late to do anything about it. Because playing catch up is very hard. It's not easy to do. And the numbers get bigger and then it just hypnotizes a person. So like I said, I'm not here to judge. I know that, anybody, not just a law firm owner, you don't want to be what we call financially undressed, but to be perfectly straightforward, we have to find out where you are to see if we can help you get to where you want to go.
Yeah. And taking that honest look at what the situation is, what's an asset, what's actually making you money, what's maybe, not what you perceive to be an asset. I think that balance sheet, I like that idea a lot.
Yeah. And, some of the law firm owners that we're working with, they've only been in their own individual practice maybe 2 years, 3 years. Some have been in it a little bit longer. And sometimes we'll find, I can tell when someone is making good money and they don't have a lot to show for it. And they're a little, I don't want to say embarrassed, but they're uncomfortable about that. Look, that's okay. We're here now. I can't fix the past, but we can definitely work on making your future better. And that's really what it's all about.
So one of the things you brought up earlier, Frank, was, the planning aspect, and you hear a lot about plan, plan, plan. What are some things that you've seen people do that really shoots their plan in the foot?
Spend like a drunken sailor.
So that big trip I'm planning to Europe, maybe not a good idea.
Well, look, it's not handcuffs when we talk about budgeting and cash flow management. It's guardrails, right? We incorporate your vacation. We incorporate potentially purchasing a second home or an upgrade from the home that you're at. What we want to make sure of is that you're not just spending wildly because my neighbor bought a Porsche. I need one too. My best friend from college now has a $2 million house. I want one of those also. Look, keeping up with the Joneses in 20 years isn't going to help, right? Because no one's going to care. Right. We have to do what's right for you. So again, I'm not going to tell you can't spend money, but what we're going to say is, okay, if you do that, then this is what happens to the plan. Now that you know the consequences, it's your call. If you ask me, is it a good idea or not, I'm going to voice my opinion because I'm here to tell you what you need to hear, not what you want to hear. And as much as I might like that new car or that new house that you want to buy, if it doesn't make sense for your plan, I'm going to say probably not a good move.
Yeah, that makes a lot of sense. And I heard it once put, you're buying things to impress people that you don't even like sometimes.
Yes, that's it exactly. Right. Perfectly said.
Yeah. And I like nice things, but I also sometimes having that delayed gratification, you can have nicer things or more stability in your life later on.
Right. And I think what some people don't realize is for as long as you work, you're probably going to be retired or semi-retired just as long. Your money's got to last. And if you're making really good money and we're projected to do very well and we have room for you to spend on those shiny objects, okay, I'm going to tell you what it looks like if you do that. And if you can, that's fine. If it's not a great idea, well, then, like you said, nobody's going to care.
The other thing I wanted to ask you is financial habits. What are some good things that you see people do that really benefits the plan?
Yeah. So good things are always making sure that, first off, we want to have a foundation, right? Because if your financial plan doesn't have a rock solid foundation of insurance products to protect and have guardrails on it, then your financial plan is built on sand. So starting with investing, starting with wealth management, starting with retirement planning, before you make sure that you have your insurances in place probably is not a good idea. But with most of the law firm owners that I'm working with, they already have done some of those foundational pieces. We just might need to tweak that a little bit. So I'm happy when I see that. I'm happy when they've protected themselves with life insurance and disability insurance. What I sometimes don't see is where there's partners involved and yes, they have an operating agreement, but they don't have a buy-sell agreement or a succession planning agreement. And then that succession planning agreement, even if they do have it, in many cases isn't funded with the insurance products. So for example, Kyle, if you and I were partners and I died, if I was married, you would be partners with my wife. And I'm sure you don't want that. Where the insurance
probably not. That would probably get a little complicated. Yeah.
It would. First off, she doesn't know anything about running a law practice. Secondly, She can't be an owner of a law practice because she's not an attorney, but she's going to want her money for what I was bringing in. So that's where the insurance part comes in. So, but I've seen firms, they've already had that established. That's great. I think where they need the tweaking really is on the tax planning and looking at strategies above and beyond your traditional 401k plan. And
Okay.
that's where there are some additional tax savings or strategies that we can do.
Well, I wanted to get into that, so I'm really glad you brought that up, Frank.
Mm-hmm.
So, where do you see money leaking out that, just missed opportunities? What are some common ones that you see?
Filing your tax return and making that 6-figure payment before you actually do some strategizing. I mean, I've seen it happen 2 or 3 times this year already. And it's not because I got there too late necessarily. It's because there's no proactive planning by the CPA, or maybe there's another advisor that's involved and they haven't discussed it. So as we're sitting here talking today in July, and I don't know when you're going to post this, but if you haven't filed your tax return yet and you're on extension, we still might have a chance, depending on your income, how you're structured and what's involved, to maybe do some tweaking to establish a plan that you can fund on a pre-tax basis to lower your taxable income. There's still a little bit of time, but we would have to act pretty quickly to do that. And that would be either a cash balance or a defined benefit plan. The difference between the two is that with a cash balance plan, each person that's part of the firm sees their balance. So if there's more than 2 people, we're probably going to do a cash balance plan. If it's just a single sole owner, we're probably just going to do a defined benefit plan because they're just one balance to look at. But they essentially kind of do the same things.
Okay. So, I mean, it sounds like tax planning needs to be thoughtful and planned out. It's not something we just kind of throw together. We need to be proactive rather than reactive in this situation.
Absolutely. And beyond retirement planning do you have the right corporation set up? What is your entity set up? Are you paying yourself W-2 income is another one, which I've seen in the past where they're not paying themselves W-2 income. And that, all I say is, look, that's a red flag. And if you want to get audited, that is a perfect reason to potentially get audited. You might skirt that issue for your entire career. I don't know, but you don't want to get caught not doing that. So it's very important to have the right structure. It's very important to have W-2 income for yourself. It's also important to keep your business expenses separate from your personal expenses. So you may have, an American Express credit card. Fine. If that's what you want to use for your business expenses, then keep that for your business expenses. Not only is it easier for you to track, it's going to be much easier for your CPA to track as well, because there's really only one credit card that you're using for that. When you start mingling things, it just takes longer to calculate, takes longer to figure out. So try to keep that separate. Also, keep your money separate. Personal accounts, business accounts. And I know attorneys know about having their trust account for monies that they're, putting in escrow, so to speak. Right. You have to keep those separately. You don't want to commingle that because you can get yourself into trouble, even if it's an accident. Like, I wrote a check from my business account because I didn't have my personal account, checking account, check with me. You don't want to do that. It's just not a wise move. Try to keep everything segregated.
Yeah, that makes a lot of sense. And Frank, I wanted to ask you, how do you help or how do you work with your clients to shift their mindset from chasing revenue to protecting their profit?
We usually go out for drinks. No, I'm kidding. It's just having conversation and asking them, what are your goals? What are your objectives? What do you want your firm to look like? And what do you want your life to look like? Because a lot of it is really lifestyle. We can grind away and work like, mad dogs all day, all week, all month. But what are we really doing for ourselves? And people will spend more time planning a 2-week vacation than they will planning 20, 30 years of retirement. And that's the rub, right?
That's a great point. Yeah.
Yeah. I mean, you can't give me 30 minutes to 45 minutes every 2 weeks to kind of get this started for the first 60, 90 days. Well, if you keep putting it off, we're going to be here next year and you're going to be in the same boat, but we're going to be further behind.
Right.
I mean, you'd be surprised what 1 year of waiting can actually cost you. And
yeah, that compounding interest. Yeah.
Right.
I mean, you're potentially losing thousands or millions of dollars depending on the situation, because the longer you wait, the more it doesn't have the ability to compound and grow and accrue.
Right. And, I realize that there's a lot of challenges that you have as a law firm owner when it comes to finances. Everybody's looking for you to spend money with their little fancy tool. You've got a business coach, you've got a guy that does your website, you've got intake, you've got all these different things that you have to do. And I get it. But the money that you're making, you have to do something with it. And we have to make sure that we're being smart about it.
Yeah, and it's not just about earning the money, but it's about protecting it and actually keeping it, holding on to it, not losing it to taxes or other expenses that aren't the best, aren't the wisest to have.
Here's a couple things. It's not what you make, it's what you keep, right? And that's where the tax planning comes in. But we've all heard about asset allocation. Well, what about asset location, which is often overlooked? Where is your money? And sometimes I'll ask someone, and you can be the guinea pig here, would you rather have $5 million or would you rather have $3 million?
All depends on how much is taxed, or how what kind of access do I have to it? What are the terms around it?
You read my mind, right? In theory, if you're putting everything into tax qualified plans, 401ks, IRAs, cash balance defined benefit plans, which we need, right, to save on taxes currently. And if that's what's made up of that $5 million, well, that's all taxable on the way out at a tax rate that we're not going to know what it is in the next 20, 30 years, right? We don't know if the bill that just got passed is going to hold up for that long, right? They say permanent, but it's permanent until it gets changed.
Right.
If you have $3 million and it's all coming out tax-free, and you're also not forced to take it out because of required minimum distributions, you might be in a better place. So oftentimes we balance it out, and we sometimes do a little bit of each, because I like to talk about, the 3-bucket strategy: taxable account, tax deferred account, tax-free account. And it's that tax-free account that usually gets the least amount of attention, but has the most power when you need your money the most.
Well, Frank, if somebody, they don't like what their, situation is, I mean, what would you recommend for them to do as their first step?
Reach out to me. You can find me on LinkedIn. I'm there every day. Not all day, but I'm there every day. You can call me, you can email me, you can book an appointment. I'm happy to talk to anybody, have an initial conversation, find out what it is that you're doing, find out what it is that you're happy about. If it makes sense for us to work together, we can move forward. If I don't think I can help you, or for some reason, and I don't know why, we don't like each other, then we just move on. But at worst case scenario, I can tell you, you're in good shape. There's not much I can do. Let's part, as friends, and maybe things change in the future. But like going to a doctor, right? You're not always going to take the first recommendation to have heart surgery. You're going to want a second opinion. This, I don't want to say isn't that serious. I mean, it's not that serious. It's not life or death. But when it comes to money, you want to make sure that you're making, good decisions earlier than having to try and fix them later. And from a book I just recently read, it's better to prepare than it is to repair.
Yeah, that's well said. Well, thank you so much for being on the show, Frank. I've really enjoyed the conversation. And if you would like to connect with Frank, go see our show notes below. We'll have all of his information there, so you can reach out and connect with him and see if it makes sense to work together.
Thanks, Kyle. Really, really appreciate it, and hope we get to see each other in person soon.
My pleasure. I hope so too. Take care, Frank. Bye-bye.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.